Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
The people on business television on both sides of the border were falling over themselves this morning because we'd hit new inter-day highs on both sides of the border. What's your reading on all these different equity markets and how high they are right now?
Man, I mean, it's just insane. I had a subscriber send me a video. He asked me to watch it, and I watched it this morning. And it was from an Elliott Wave perspective. And he was just asking me what I thought. And what I took away from the basics, basic thing I took away from the interview was the guy said, at this degree, it's stretched. At this degree, it's stretched. At this degree, it's stretched. But we're not done yet. And that's exactly, where we're at from my analysis as well. Back in the summer, we had, or early summer, we had a couple of Dow theory non-confirmations form, and then we lost them. We had an intermediate term AD line in my work that is, we've seen it, a non-confirmation that we've seen at every major top since the inception of that data in 1926 in my database, and that's been lost. We talked about that. And so is it an extended bubble? Of course. I think anybody can see that, but and every technician on the planet is talking about it and how extended it is. But at the same time, without any of these markers in place, it doesn't appear to be done yet.
Isn't that one of the most frustrating things, is to see something happening and you're just a spectator on the sidelines watching it and there's nothing you can do?
Well, the frustrating thing is to see something that is so far outside of a norm. And think about this. When you have technicians, and I'm not making excuses. It is what it is. This thing is just the point is how insane it is. Jim, think about it this way. The level that this thing has stretched, the fact that it has defied, let me say it this way, the fact that it has defied or extended or stretched or whatever you want to call it, virtually every technical discipline shows how extended it is. It doesn't invalidate those disciplines. Is Peter Eliades a fool? No. Is Dr. Mark Farber a fool? No. Am I? I don't think so. All the calls I've made in the past, has it made us look like fools? Of course it has. And it's created tremendous complacency in the process. And so, yes, that is very, very frustrating. But the fact that all these respected disciplines have been, for lack of a better word, blown up, if you will, that shows how extreme this is. And so, yes, I think absolutely, I stick to that. It's anyone with any kind of common sense at all should be able to see what we're dealing with. But we've got to get a setup to top it, and we're just not there yet.
What will be that setup? What should people be looking out for?
Well, in my world, there's, like I have said before, it's like a checklist, and that's the beauty of this system. And let me explain this just a little bit. You have, number one, we need a Dow theory non-confirmation. We need an intermediate term AD line non-confirmation. We need some other structural things that won't make sense if I even talk about cyclically. We need to see those things in place. We also ultimately then need to see all these things on this checklist solidified with a Dow theory primary bearish trend change. Because, like I've said before, and it is a fact, it's not opinion, it's not subject to negotiation, it is a hard, cold fact like the sun rises in the east and sets in the west. This market will not escape a Dow theory primary bearish trend change when the bubble bursts. So, we need to see all those things in place, and we need to see it confirmed or solidified, or whatever term you want to call it, with that primary bearish trend change. And until we get there, we're not there. Now, the problem has been, as this has extended and stretched and extended and stretched, we'll see one or two of those little cracks and it'll look kind of weak, and then the can gets kicked down the road and it recovers. And then we'll see it try again, and then it recovers. And we'll see it try again, and it recovers. And from what I gather, I don't look at a lot of other people's work, but from what I am gathering, is that other disciplines are seeing the same thing. They'll see something, they'll see it try to set up, they'll see it try to set up, they'll see it try to set up, and nothing will stick. It just won't materialize. And then that has also prompted the question, is that because of manipulation, or is it just the market? I don't know, and it really doesn't matter, because it is what it is, and like I said, the market will not escape the primary bearish trend change. That is a fact. So I feel like that, that's the only given we have at this point.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what do you see happening with commodities?
Well, commodities, we've talked about this. If I digress just a little bit, there's a 3-year cycle in commodities. The 3-year cycle bottomed back in early 2016, and we had an intermediate degree low back in the summer in June. And commodities have been on an upswing since that intermediate term low. Now, I have a chart in front of me to talk off of. Since that intermediate term bounce has begun, it has not taken out what is so far stands as a 3-year cycle top. And so they haven't broken down, but they haven't moved above their previous high either, and so they're just kind of treading water. And I think what's happening, the evidence, when you weigh it, think of the little scales like at the lawyer's office or whatever, and you put evidence on each side. Well, the evidence, it's tipping the scales toward the 3-year cycle top, and that it just hasn't broken yet. And I think that's what's going on with pretty much the entire commodity complex. And I can give you some examples of that as we walk through this. Number one, looking at gold. Well, we had obviously a major low back in December of 15 and December of 16. And so far the low for the move down has been the 15 low, but then we had that kind of retest of that low in December of 16. Moving forward, we had an intermediate degree low back in the summer in July. And then that intermediate term top occurred specifically on September the 8th, and since then gold has been weak. Again, structurally, yes, it's hanging in there, it's treading water, but it hadn't gone anywhere either. And again, when you weigh the evidence based on the structure that we have in hand, I stick to that gold should ultimately give way, as should commodities with their 3-year cycle top. Gold should ultimately give way and wash out into that 9-year cycle low. I realize that it, like I said, it's treading water, and that's giving false hope, I think. And if you peel back the layers and look at that, evidence of that false hope, let's look at the gold stocks themselves. Again, the cycles are pretty much, all this stuff pretty much ebbs and flows together. I mean, it's just a matter of looking at a chart and identifying, understanding what degree high or low or whatever you're looking at, identifying the cycles. But we had the same low in the gold stocks. I'm looking specifically at the Gold Bugs Index, the HUI. We had the higher degree low back in December of 16. We had the exact same intermediate degree low on the exact same day on July the 10th as we had in gold, and gold rallied into, the HUI rallied right along with gold up into the September 7th high. Well, looking at that chart, it's closing the gap. I mean, it's very close to having come back down all the way to the July low. So the relative weakness of gold stocks versus gold in a real gold bull market, I mean, this is just a fact, and you can do the math, the gold stocks tend to outperform gold. Well, that's not what we're seeing here. Structurally, the gold stocks are still weaker. So that in and of itself is a warning that this isn't the move in gold, that there's more weakness. This tends to validate that expectation of the washout into the 9-year cycle low in gold. So I stand by my statements, even though on the one hand it's treading water, on the other hand the evidence still tips the scales in that direction. And also if you look at crude oil, a very similar pattern. In this case, we had an intermediate degree low back in June 21st to be exact. Crude oil is up some today. It's still probing for its intermediate term top. I think that the intermediate term top that crude oil should be approaching now is of the same degree that we saw in gold back in September. I think gold is leading a little bit, if you will, and crude oil is still pushing into that top. But another example of that, why is it if crude oil is in some new bull market, why is it that we're seeing the relative weakness in the oil stocks? If you look at the oil service index or whatever, you're seeing the relative weakness. So it's telling me the same thing, and then based on the cyclical structure or the evidence or the weight of the evidence with the cyclical structure, those gold stocks and the oil stocks are validating the expectations, the overall expectations that we're seeing with the individual commodities and really the overall commodity complex.
We'll have more with Tim Cyclesman Wood right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Tim Cyclesman Wood. Tim, I've heard some people have thought that the market would be in decline by now and have been shorting it, and they've been caught out big time. Is this something that's been a big trend?
Of course. I mean, and I think that is a factor of the people that have recognized the bubble for what it is, and they'll see based on their discipline and belief that, okay, this has got to be it. And then, like I said, the can will get kicked down the road, and the setup or the potential setup will be lost. It never quite solidifies. And like I said, the solidifying point for my work is the primary bearish trend change. And so a crack along the way until it's solidified is just a crack along the way. But if I can digress on the same train of thought that, is talking about with looking at the underlying stocks, the gold stocks versus gold and the oil stocks versus oil, and the commodity complex overall. If you look at equities, we see something similar there as well. On the one hand, yeah, you bet, man. I mean, this thing is stretched and everything is lost, and yes, we're setting in new highs and everything feels great and complacency is high, and like you said, nobody can short it. They get blown out and everything looks good and so on and so forth. But when you start to kind of look, there are some warnings, and one that really concerns me. I mean, it's a matter of overlaying the chart. It's not opinion. It's hard fact. If you take a chart of the Tel Aviv, we've talked about this before, and specifically I'm looking at the Tel Aviv 35, and you look at the Dow Jones Industrial Average, overlay the charts, and like I said, in any given equity index, the ebb and flow of the cycles are pretty much the same. Not to the same day or even the same week, but they're very similar. And the thing that I'm seeing with the Tel Aviv is that it has broken below what would be its 4-year cycle low back in 2016. Now it's rallied off of that low, but the structure's broken. So when you throw the evidence in the scales, it tells us we've seen a 4-year cycle top there. When I look at some of the other foreign indexes, like the CAC and the DAX, you're not seeing that. When I look at some of the subsectors, like the airline index, if you overlay, just do a simple overlay of the charts and look at them, the airline index is a pretty good indication. It like a leading indicator. It's just kind of one of those little pieces of evidence to throw in the scale, and it's looking like there's some issues here with the market. I mean, it's weaker. When I look at another one, oil service sector, and overlay that chart with the industrials, what you see is, again, it's not tit for tat, but it's darn close, and we've seen a massive divergence in that it peaked. I'm looking at the chart now as we speak. It peaked back in December of 16. Those divergences don't tend to last forever. And the fact that we're seeing it, and the fact that we're seeing the same sort of, deterioration with some of these other sectors tells me, or it just confirms, like I said, when you start to weigh the evidence, it confirms that I don't want to say that the industrials are wrong, because they're not wrong. I mean, they are what they are. But it tells me that they are the oddity. It confirms that they are the extreme. It confirms that this is a bubble. And so I stick to that. But, again, we need to see the setup.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.